The odds of this market continuing just to advance higher here and continuing to deviate further from that 200-day moving average is becoming much less likely over the course of the next few months, and particularly before we get into the elections. Let's talk about what you need to know before the bell this morning. Market sold off a bit yesterday, and very interesting. I mean, we just remain very, and we talked about this just the other day, we have a very, very narrow trend channel that the market is trading in right now. And like clockwork, we get to the top of the channel, we sell off to the bottom of the channel. We're approaching the bottom of that channel here, which is right around the 20-day moving average. And again, the market has just kind of stair-stepped higher here ever since November, and it's just been a very steady, non-volatile decline. And you can really see this if you take a look at the MACD indicator, which is kind of this indicator that normally gives you kind of good buy and sell indications. It's been a very unusual type of position for the MACD right now because it just continues to trade flatline. And it's at an overbought level. Currently, the deviation of the moving average is well above normal. And again, just trading sideways. And as it just trades sideways here, the market just kind of keeps grinding itself higher. We do continue to have that negative divergence in momentum, which is the only kind of real concern at this point. Volatility remains, as we talked about yesterday, the volatility index remains historically at very low levels. So, this is also something Mike and I will talk about this morning, but there is the setup here. This type of structure in the underlying market is not real healthy. So this can't, in other words, this can't continue indefinitely like this. This is going to lead to a reversion in stock prices. The only question is when. But as I noted just a little bit ago, this deviation to the 200-day moving average is getting rather extreme. And so if we go back historically and kind of look at other periods where we've had such an extreme deviation in the 200-day moving average from this market, we can see that this normally kind of aligns where you have previous corrections in the markets as well. And again, we don't get these big deviations from the 200-day moving average very often, but when they occur, they always tend to lead to a reversion back to the 200-day moving average. And so again, this isn't surprising that this occurs. This is just how this kind of bullish attitude works. When you get a lot of very bullish sentiment in the markets, that's what happens is you get these kind of big deviations in the markets that are ultimately not sustainable, and you will eventually get a correction. Again, doesn't mean tomorrow, but the odds of this market continuing just to advance higher here and continuing to deviate further from that 200-day moving average is becoming much less likely over the course of the next few months, and particularly before we get into the election. So again, just kind of just going back to basic risk management protocols, just something to pay attention to. As I said, this issue where the MACD is just kind of stuck at a very elevated level with a deteriorating rate of momentum is also concerning. It normally doesn't happen. You normally get these kind of deviations from the market, but they don't tend to last as long as this one has. So this has been a very extended advance. We're getting closer to the end of that advance. So again, good time to take profits, rebalance risk, think about kind of alternative structures over the next month or so. That's what you need to know before the bell this morning.